If you lost money this week as an options trader, then I want to walk you through what happened, what went wrong, and how to identify if a trade is actually going bad or not. And so I know that the market actually was very red this week. So if we see here, starting Friday, actually Friday, Monday, Tuesday, Wednesday, and Thursday, all red days, it dropped by a matter of almost 4 or 5% in a matter of a week. And so that's a lot of a big pullback for the overall market. Again, not the worst one we've ever had, but still significant compared to our previous uptrend that we've been having. This can lead to a lot of losses, whether you lost $100, $1,000, a few thousand, you would have seen a very significant impact to your options trading. As you can see here on my Tastytrade account, which is where I trade options through, if I go back a week, you can see here that earlier this week, I was down a lot of money. This was actually around a $4,000 loss for me. And now I'm back up near break even. So I want to discuss what is an options trade and how we actually understand if it's making money or not. What affects the intraday movement of profit and loss and how to understand if we're right or wrong. And some things we should do to fix that in the future. First, let's understand what is an options trade. So again, there's a lot of different options trades that we can discuss and talk about, but for this one, I'll just break down a put selling strategy. So we sell a put, we're basically betting that the stock stays above a certain level. So for instance, if I sold a put at this level, 5,400, I am betting that this asset, yes, will stay above this level. If it stays above this level by the time that I picked, then I'll make money regardless of what happens in between the time. So for instance, if I sell a put, which is this level, if I sell this put with 90 days out into the future, so 90 DTE, which means 90 days until this contract expires, if by the end of this 90-day window, the asset stays above this level, then I will make money, regardless of what happens in between. As long as by the end of the time period, I'm above this level, I'm going to make money. So that's essentially what an options trade is. It's you're betting on a level by a certain time frame. So if you stay above that level by that time frame, then you'll make money. And so that's what the put selling strategy. Now, if it's a strangle, you're betting on both the bottom side and the top side. So you're betting that'll stay above this level and below this level by a certain time frame. So if it stays within this level by a certain time frame, then you'll make money. And so again, that's how you can assess what is going on with the options trade. If it were to expire today, would I be making money? And so you can see here, if the stock is currently trading here and my level is here, yes, if it were to expire today, then I would be making money. So I'm still good to go. This option trade is still valid. It's still a winning trade by the expiration date. And so that's something to keep in mind. What is the options trade actually doing? I'm betting on a level by a certain date. Am I still within those ranges? If so, I'm good to go. So then if that's true, if I'm still above this level, which means I'm making money, then why do I see all this intraday movement? Why do I see my loss going higher and I'm losing a lot of money when my options trade is actually structured correct and I haven't actually lost money from that perspective? Your intraday movement and profit and loss for options sellers is completely based on VIX. VIX. This is the volatility index. So if I'm looking at the volatility index here, I'm going to clear out my chart. Sorry, this is an impromptu video. Not much planning here. But if we see here, VIX, this is the volatility index, shows us how much fear in the market there is. And so as option sellers, we are capitalizing on that fear. So when fear goes up like this, option sellers lose money. So if you're right on your trade, like we just saw, like the ES is still above the put selling level I bought. So theoretically, I'm still making money, but I'm seeing it as a loss. Why? Because VIX went high. VIX controls what my profit and loss is for my open trades. And so as VIX goes up, I'm actually going to be losing money. When VIX comes down, my trade will reset or I'll actually start making money. And so what can we understand from this VIX movement will control my intraday profit and loss. It will actually control how that's doing and have a direct impact on them. And if we're seeing VIX hit a level, so for instance, you can see here, VIX did spike up, which means I was losing money, but then VIX hit this common resistance level around $22, $23 and started to pull back. So this tells me, hey, good sign, the market's going to start to pull back. This means that my intraday losses that I was having, my $4,000 losses, are going to start to recover. And that's what we saw on Friday. You can see here my losses got bad. VIX started dropping, which helps my profit and loss go back to normal. And so again, that means you're watching VIX. So first you're assessing, is my options trade correct? If by the expiration date, will I make money? Is it above my level, below, whatever it is you're betting on? Then it's, okay, let's look at VIX. Does VIX look like it's going to start coming down soon? If so, that means you'll start to see your profit and loss come down. If VIX going up, okay, that's why your open loss is still hitting there. As long as your options trade is still intact, you're still above that level, you're good to go. So those are the things to look at and to understand about how options and profit and loss are affected. And then so the things that you can do to fix that is, number one, have a consistent plan. Okay. So know when you're entering and why. Know when you're exiting and why. So entry means, okay, I'm going to enter at this time, at this price level because of this reason. And then your exit is, I'm going to exit for a loss at this amount. I'm going to exit for a loss at this take profit. And that way, regardless of what happens, you stick to a consistent plan. Almost all plans work when it comes to trading, like almost all strategies work. It's just being consistent with it. And so again, knowing your entry, knowing your exit rules, knowing why this strategy works, and just consistently following it will help you out. Number two, what you can do is you can actually start controlling your buying power based on VIX. So again, looking at VIX, because like I said, this controls what our profit and loss is going to show on the trade, regardless of if our trade's actually winning or not. And so when, So when VIX spikes up, what we'll do here in this instance is that's when we'll actually be entering trades. Entering trades around these zones when VIX is higher will actually give us a higher win rate. Why? Because as option sellers, we make money when VIX goes down, right? So as VIX goes down, we make money faster. And so when VIX spikes up, like right now, or specifically on Thursday, what's the time to start selling more options? Because then VIX is going to drop and come down lower, which will then help us see a profit faster. Sweet. So that's the second thing we can do. And then number three is we can size appropriately. If VIX is down here in this lower quadrant area around $15 or less, this means we have a lot of risk as option sellers, because the risk of VIX going higher, which means our open losses going really large or being really large, is a lot higher. Why? Because we're lower. And if we're lower, there's a better chance of it going higher, right? And so when we're lower, we should be in less positions. So for instance, if we typically are in 5 positions total, maybe when the positions or when VIX is down here, we're only in 2 trades at a time. And then as VIX bumps into the higher levels, then maybe we size up into 5 trades at a time because it's more safer for us to do. So again, we're going to size appropriately based on the market. So just a recap of this impromptu video. If you're losing money as an option seller, number one, look at, is the actual structure of my trade, whether I'm selling a put, a strangle, a 1-1-2, whatever the strategy, am I actually making money? If it were to expire today, would I make money? If yes, you're on the right track. Number two, look at VIX. Will show you basically a realistic curve of why you have immediate losses. Does it look like it's going to turn around soon? Is it hitting a resistance point? If it is, you're probably good to stick through the trade. If not, you might want to consider exiting. And then as always, have a predefined plan, know why you're doing it. Look at VIX when entering and size appropriately. So again, I hope that helps. I know I got a lot of questions about this, and I wanted to make sure that you understand what's going on with options, why they're structured this way. So sorry if I look bad. Sorry the video wasn't as planned out, because it wasn't. But anyways, I hope you enjoyed it. Please click the subscribe button if you enjoyed it, and check the description down for any other helpful videos. All right, see you guys.